Microsoft just Godzilla'd the entire stock market by providing a stellar earnings report. There was no weakness in their earnings, and now, like Godzilla, Microsoft has a few battles going on that it is winning. The first is with the 3 Trillion Market Cap Club. Only Apple and Microsoft pop in and out of this club. No other company has crossed the mark. For reference, Google has yet to hit the 2 trillion market cap, so Apple and Microsoft are a trillion plus ahead of the nearest competition, and Microsoft recently took first place. So Microsoft-Zilla won that battle for now. The next battle for Microsoft-Zilla is versus the entire S&P 500. We'll see here if we take their stock chart out 1 year, they're up a massive 57.3%, or if we take an S&P 500 index fund like VU, they're up 17.56%, a big difference. So again, Microsoft-Zilla wins and has for a long time in this area. Now let's talk about the power of Microsoft-Zilla. Microsoft is seeing success with AI, as it stated that it was a huge boost for the company as it is integrating it into almost all their products and services. Basically, they're layering it in everywhere they can. So they are seeing demand for their AI integrated products. This shows customers like their AI model and that AI is providing a benefit. Microsoft went hard early on with their relationship with OpenAI and getting it all integrated with their products and services, so they are benefiting from that early adoption and marketing of their AI products and services. This, I believe, will be a huge part of their success in the future. Think about it. When you use something and you're used to its interface, processes, usability, etc., you don't want to leave that, and that is what Microsoft is doing, ensuring it gets in early and gets its customers addicted to their AI models and usage so that they don't want to leave. It's like Apple with their phones. I use Apple, and then someone will ask me to help them with their Samsung phone or a different type, and I don't know how to help them because I'm so used to Apple, so I'm going to stick with Apple. That's how they get you, and that's exactly what Microsoft is doing. So let's see Microsoft's success in my portfolio, and well, it's dominating versus all my other companies. There is Microsoft-Zilla's performance dominating once again against all the other stock monsters, and Microsoft for me is up 66.82%. Definitely the company I've made the most money in, and it makes up 20% of my portfolio. Now you will see an ETF called Fenny below, that's an energy ETF, but I barely have some money into that. I got in when the pandemic hit, so definitely it is up 70.93%, but Microsoft I've averaged in over time, which brought my cost basis up, and it still is performing amazingly, up for me that 66.82%. So next we are going to look at some financials here in a minute, but here are some highlights from their earnings. Revenue was $62 billion and increased 18%. Operating income was $27 billion and increased 33%. Net income was $21.9 billion and increased 33%. And their diluted earnings per share came in at $2.93, and that increased 33%. So you'll see here they're up from anywhere from 18 to 33%. That's impressive. That's stellar. In fact, what I really like from Microsoft is that over 80% of their revenue is from subscription services, and that revenue is safely diverse. Let me give you some proof here and compare it to some other companies that I think are more at risk. Microsoft is safe. Here's their 3 main segments for that revenue section at the top: the productivity and business process, intelligent cloud, and more personal computing. They each take up a sizable portion of their total revenue. I put this into a chart just to put it in perspective. So you'll see the total revenue there in the middle, and then the revenue that each segment brought in at the top. And this is for the 3 months ended December 31st and the 6 months ended December 31st, of course, of 2023. But you'll see the percentage of revenue it makes up compared to total. And for productivity and business segment, it makes up about 31%. For intelligent cloud, that makes up 41 to 42%. And the more personal computing segment makes up about 27-25%. They're all very healthy percentages. And just to put something in perspective, an unhealthy percentage is Tesla. If you look at their revenue, 85% of it is coming from their automotive revenue. To me, Tesla is just a car company, as having 85% of revenue coming from one segment, from high dollar products that consumers have to take out loans for. No thank you. Now, Google, a much better business than Tesla, still has 75.91% revenue coming from advertising, and it really is mainly from Google search and YouTube. So the other day I was driving with my friend. He switched from Safari to Bing to Firefox to Chrome, all within 10 minutes to test each one out with ease. This makes me uneasy to have a product that is simple to switch out of. Granted, Google's products are still superior and many people just stick with that one. It's still risky. So we see the superiority of Microsoft's different revenue segments being more evenly distributed. That provides safety and diversity that creates a strong company because it is dominating in all three of its segment areas. Now, Microsoft also has products and services that people depend on. The corporate world depends on Microsoft's Office products. Many businesses depend on Azure for their cloud needs. And then there's things like gaming. I'm not into gaming myself, but I bet gamers depend on Microsoft's offerings, and they just acquired Activision Blizzard, so on and so forth. So MicroSoft-Zilla's financials are what we're going to look at now. Their income statement. We're going to see total revenue is going up. The 3 months ended and the 6 months ended. So for example, 3 months ended, it went from 52 billion to 62 billion. 6 months ended, it went from 102 billion to 118 billion. Now the total cost of that revenue is increasing, but that is due to them really pushing this AI into everything they do. But we'll see net income is increasing, so are their earnings per share. If we move to their balance sheet, now this is comparing December 31st of 2023 versus June 30th of 2023, so nearly two back-to-back quarters. We'll see the cash and cash equivalents went from 34.7 billion down to 17, but there's a reason for that, and I'm going to explain why you need to put things in perspective. This is comparing 2 quarters within the same year, but we're going to look at year-over-year data, and it's going to tell a different story. Now, total assets went up pretty healthily from 411 to 470 billion, and total liabilities also went up, but at a much slower rate from 205 to 232. So the perfect situation is assets going up, liabilities going down, but if liabilities have to go up, they need to go up at a much smaller rate than assets, and that's what's happening with Microsoft. Now, long-term debt did inch up, but there's a reason for that I'm going to explain in a minute. So overall, I like their balance sheet. It's doing excellent, and especially when I explain things more. Cash flow-wise, we will now see that this is comparing year-over-year data. You'll see I highlighted 2023, and then there's 2022. So net cash from operations is increasing at a very healthy pace. You'll see it went from 11 to 18 in the 3 months ended, and 34 to 49 in the 6 months ended. Now, if we put in the additions to property and equipment, this is how you get free cash flow. You take the net cash from operations, subtract out that additions to property and equipment, and with the net cash from operations going up pretty significantly, where the additions to property and equipment are going up but at a much slower rate, that means the free cash flow is growing. I love to see that. Now, highlighted are the acquisitions of the company. You'll see that went up massively. We're going to see why in just a second. But overall, comparing year over year, cash and cash equivalents is going up. This is why when you're looking at data, you got to put it in context. Before, we were looking at basically 2 quarters in the same year. And of course, we're going to see cash going down for the reason I'm going to show you right next. But year over year, it's still going up. Now, the reason why the cash and some other things are a little bit off is because they acquired Activision Blizzard on October 13th, 2023 for a total purchase price of 75.4 billion, consisting primarily of cash. There is the reason that cash went down between the quarters that we compared within the same year, but the fact that the cash is still going up year over year shows how impressive Microsoft is. Now, we can take this out for this acquisition to see how it is affecting the major classes of assets and liabilities. So see how it affected the cash and cash equivalents by almost 13 billion, goodwill by 50 billion, and then there's that long-term debt. And we'll see that their long-term debt did inch up a little bit, and this is why. I am totally fine with this because I think this was a great acquisition and it's really going to boost Microsoft's gaming division in the future. If we, again, look at that segment revenue, we looked at the top portion, but also operating income came out strong and they are increasing their revenue in every single area here. Very strong, very good, and again, it's diverse. Now, if we look at the significant products and services by revenue, I highlighted every one that is going up in yellow. So there's only 2 at the bottom the devices and other, but of course those are the smallest amounts. So they're pretty meaningless compared to the other areas, which are all growing. Look at gaming, Windows, LinkedIn, search is growing. So I'm curious someday to see if their search business takes away from Google's, but I think that will take some time if that does happen. Of course, Azure grew by 30%. This is a very important part of their business, compared with 29% last quarter and compared to the expected 28% from analysts. So they are growing fast with their Azure still. 30% is impressive. In fact, there were 53,000 Azure AI customers. A third of those were new within the last 12 months. Now, Google grew their cloud by 26% this quarter. Strong growth, but they are in a far third place. So that puts Microsoft's growth into perspective and just how strong their Azure is, because they're massive as is and growing at 30%. Now, I made this video before Amazon's earnings, so a brief pause for the data so you can compare. All right, now, forecast-wise, their forecast was soft and included increases in operating expenses and CapEx, mainly due to AI expansion. So the stock moved a little after earnings, up about 1 to 2%, as Microsoft is very pricey, but the forecast is what really moves a stock price, and Microsoft's was soft rather than strong. So I say tread cautiously, as Microsoft and other big tech companies may have hit their resistant points of overvaluation, as after stellar earnings, we did not see Microsoft jump up. So that tells me any bad news and this thing may be dropping along with other big tech companies. So just tread with caution. But with Microsoft being the Godzilla of the stock market, even after a drop, you know it will be back with a vengeance, doing what it usually does and decimating the S&P 500 by growing much faster, as we saw. So be prepared for a bumpy road, but that means be ready to buy. I would like to add below $300 per share for Microsoft. It's possible. We've seen big drops with all these big tech companies before, but keep the eye on the prize, and that is long term, where I am confident Microsoft will continue to have its growth dominance over the next decade or two. Okay, well, just as I look forward to the next Godzilla movie release, I'm looking forward to the next Microsoft earnings release to see what it conquers next. Let me know what you thought about Microsoft's earnings and what you think about Microsoft as a company. Do you think it can still dominate as the largest company in the market as of this video? I think it can. I think it will. I think Microsoft has plenty of room for growth and is setting itself up for decades of outperformance. So watch out for MSFT-Zilla if you ever plan on betting against it. That is all for today. Be sure to subscribe. Have a great rest of your day and happy investing.